Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, July 29th, 2022. It's 10:33 Eastern Time, so it's about 1 hour after the market has been trading today. I'm going to go over some key levels to watch, developments, and we're going to start out here with the long-term charts, and we're going to do something a little bit different. I know every day I typically go over the same charts, usually the NASDAQ 100, either QQQ and or the futures NQ, usually looking at the short-term time frames, but we're going to look at the equal-weighted indexes as well today, the equal-weighted NASDAQ 100 and the equal-weighted S&P 500. So here's this is kind of what's always does and has been for months now, many months and really years, formulated my longer term bias or views on the market. And just to kind of recap, we had big divergent high, one of the biggest divergences in years. These are same divergences that I use to mark, tops of major markets and bottoms of major trends, bull and bear markets, especially when you're out here on the weekly time frame. You had last time we had negative divergence. Well, some of my boards have it drawn. You did have it on the daily chart, and you had it also on the weekly RSI right before COVID hit. Oh, you know what? It's there. I think it's just scrunched down here. Yeah, there you go. You had a small divergent high right there. You had divergence in the fourth quarter drop in 2018. That was a drop of high to low in the NASDAQ 100. Just measure it out. I know a lot of you might not have been trading back then. About 24% drop. So by that metric, a bear market in the NASDAQ 30 something odd percent there, and the NASDAQ 100 when COVID hit, and then of course where we're at now, whatever it is, that was one of my measurement way back here, calling, laying out these targets, 34% drop if my third target was hit, which it was. That was the last pivot, covering all shorts and going long there. And now here's where we're at. So at this point in time, I'm starting and more so looking to try to identify when the end of this what still looks like a bear market rally is likely run its course. What I'm going to do in this video today is, I've given you this target as a potential target, the downtrend line off the highs, the primary downtrend line, the 200-day / 40-week moving average, averages, both the simple and or the exponential. There's the exponential down below. And, nothing's set in stone. We could carry higher. If we do, massive resistance up there. Big resistance, I should say, at my first target. We've got a bullish crossover on the PPO. So there's a lot, the momentum is clearly to the upside right now. But here's what I want to do is show you the equal weighted indexes and show you the big market leaders, what they're doing today. Quite a few stocks and some indexes going into resistance. So that's about a 17.5% gain so far. Probably some more upside, but I think a pullback before we get that upside. I think at best, if we close green today, we're going to have a red week next week, and we could close red today. We'll see. I'll get to those charts in a second. But all right, so that's QQQ. So far, played out perfectly. And remember, each target, you're likely to get a reaction there. So final target remains down here at about 235, and or this longer term uptrend line right there, the blue uptrend line. Now let's look at the equal weighted NASDAQ 100, because as you'll note up here, we're up about 1.27% today, and that is largely, almost exclusively due to the FAANGs. So if you look at QQQE, just put an E at the end, and it's going to give you that equal weighted NASDAQ 100 ETF, and you can see that one is only up 0.4%. And that's also due, again, it has these guys in there, but Amazon's up 12% today, right into resistance, as I showed you last night. Big resistance. Apple's up 3.7%. And everyone, I have Microsoft's green, up at 1.4. Alphabet is green, 0.7, almost 1%. Tesla 2.1%. So everything but Meta, the big FAANGs, or what I call the FAANG plus T's now, and then those acronyms have to change because, of course, Facebook 86, the FB ticker, and now it's Meta, but I'll just keep referring to them as FAANGs for a while here until I come up with a better acronym, or did they quit changing their names? All right, this is, let me just put a line right here because that's that recent low. It's an important support level. One thing to look at, you can play both sides of it. You can play optimist or pessimist. All along in the Nasdaq 100, I've been targeting these 2020, what I call the pre-COVID lows, and that was hit on quite a few indexes, including here that equal-weighted Nasdaq 100. It was a major reaction high. That's when COVID hit. Took about over a month of testing it. It was resistance, and you had a breakout right there, big rally, came and back tested it, and that's it. And then recently you back tested again. So there's that case that could be made that maybe the bear market was over at that when T3 was hit on that QQQ weekly chart, or when the equal weighted Nasdaq 100 fell down to that key support level. And again, it wasn't just that high. It was all these reactions here for about a month and a half or so, and then the back test there. So enough reactions to say that's a pretty significant support level. But we'll see. So I want to point out that this is the NASDAQ 100 equal weighted index. I need to tighten that line up. Is a lot closer to its primary downtrend line. So, and it is, works well to the technicals as well, because this is showing you, again, if you don't understand, it's just giving you an equal weighting in all 100 companies in the NASDAQ 100, whereas the regular NASDAQ 100 or QQQ has a very, very, very much top-heavy weighting to the largest components because it's a market cap weighted index. You have Apple is a $2.5 trillion company, and that's going to have a huge impact, the biggest impact on the index. And then as you go down the line, the bottom quintile or even the bottom half, the market cap is dwarfed by just the top 5 holdings there. All right, so that's it. I wanted to point out pretty big resistance. There's a major reaction low, those previous reaction highs, and we're right there. So this is a time, where today for the first time since pivoting and going into longs back here on June 16th, starting to go and move. 401ks. I'll give you an example. Most 401ks you can't maneuver. I don't have one, but my wife has one. I'm run my own business. I'm a trader. I have SEP IRAs, things like that. I can fund self-employed plans. 401ks, you work for a company. And so I'll manage hers, and it's been really, you have two choices or a few choices. You have cash, stocks, or bonds. That's it. Really, you can't short. There's no commodity portion in there. There's no precious metals. And so as far as market timing goes, all you can do is move into cash, strategically or tactically go into bonds, which we had a nice trade on bonds. If time permitting, I'll get to that in the video. But took profits on both bonds and stocks. Full profits on the bonds today, not full profit in the stocks, but partial. We're still not to my max targets, but I think it's a point where a case could be made that possibly this is it. And I'm showing you big resistance there. Now, obviously, if we break this trend line, that's going to be bullish. You still have that key, one of my favorite moving averages, the 40-week exponential moving average, this red line. It does a phenomenal job of defining bull and bear trends. In a bull trend, you're above it, and you buy pullbacks to it, and they usually bounce. Once you break it, and you're below it, it becomes resistance. Just like there, you had a perfect highlighted at the time back test right there, the red line to the button on the equal weighted here. And again, it was support here, bull market, you buy all these pullbacks to it, and bear market, when it breaks, the trend has changed. Back in 2018, same thing. It broke early on. You had a chance if you didn't short it on the breakdown. You had a chance to short the back test once and again twice. And if you had taken that second one, you made a 17% profit on a short trade, or you sidestepped a 17% loss on your longs. Just like when COVID hit, if you got out, you sidestepped most of the mess. And again, it's one of the best trend indicators out there as far as simplicity for a moving average, and we're still below it. So the takeaway is, until and unless that's solidly recovered, then the evidence says we're still in a bearish trend, so just keep that in mind. In a bear trend, you want to short rallies into resistance or take profits on longs if you're trading a bear market rally. Again, we have, I think, quite likely more upside to go in the coming weeks, but how's it going to play out? And again, I think we'll probably get a pullback here into next week, tradable pullback, and then maybe with that one more thrust up. All right, let's move on to the S&P 500. There's SPY. Same thing coming up on the 200-day, but let's look at the equal weighted. RSP is the equal weighted S&P 500 ETF. So here's a weekly chart. Again, all the writing was on the wall. We had a negative divergence back here. That's just a wonky little candle, maybe a little flash crash in this particular one, but that was still a big drop. 2015 was a bear market, or at best a deer market, where you went sideways for about a year and a half, and sideways to down, that is. And then of course you had the divergence right there before COVID hit, negative divergence, big drop, and then divergence before this high when the market S&P 500 didn't peak until right around the beginning of the year, where the Nasdaq peaked back in November. But what I wanted to point out here is, well, we know where we've gone. That's it's no point in talking about that. But this is was a big support level for RSP, the equal weighted S&P 500. I mean, these are weekly candles. You've got 1, 2. Look at either the body, the fat part, or the shadow, the skinny part touching. 3, 4, 5, 6, 7, 8, held it there, broke right there finally. So that was very well defined support. We broke it. We tried to back test 1 week. They popped it but couldn't hold it, so that was a whipsaw back down through there, and we're back there now with the 200 not far above. So same thing I've been saying. We've milked this rally so far. Pretty much all of it off the lows, but the risk reward right now is quickly diminishing, at least in the near term. It doesn't mean we can't pop through here, but you're probably not going to just run right through there without at least getting checked. So I just again wanted to point that out. And I'll point out the bullish developments. We're looking at a potential bullish PPO crossover. We're coming off oversold levels. And again, that was pointed out back on June 16th. That's one of the reasons I pivoted, from short to long, because of that. And I mentioned at the time on the S&P, Nasdaq 100 as well. I said last time we were oversold was COVID. So you had a chance to buy Amazon, Apple, and that's where I made it very clear that's what my preference was, to trade the Nasdaq 100 and or those market leading FAANG stocks that everybody wanted to own. If you're one of those people that didn't want to buy Apple in the bull market because it never let you in, hadn't let you in for a while, you had a chance to buy Apple down off the highs after it dropped 27%. You had a chance to buy Amazon down off the highs 45%. And this one I harped on as one of my favorites all along. Every one of these pullbacks, that weekly target of about 103.31 was highlighted as an objective long entry or re-entry. We got an initial trade, got out, re-entered there, and boom. So I wanted to, segueing now into these market leaders. So Amazon, all right, nice run, 30% off those lows, but look, that's pretty big resistance. You have this level right here, and I'm going to show it to you on the daily chart. And then if we happen to carry on through there, see this blue line here? This is the primary secular bull market uptrend line. This is when Amazon first started trading back here in 97. And that blue trend line is not that far ahead. So again, the risk reward right now, I think I made it pretty clear last night. That's why that was the final official target. I pointed out in that trade there's some potential upside, additional upside here. That trend line, that's the same trend line, by the way. It's just here shows well on the daily chart, comes off these lows from 2016, but that carries all the way back to the stock's IPO back in 97. And so that was my third and final target right here, 60-minute chart. So we hit it last night in the after-hour session. We're effectively on it again. It's 135.63 is where I had it on the 60-minute chart. So we're within a percent or so there right now. That's this level right here. So you have pretty significant resistance. The stock's overbought near term. Again, could it carry higher? sure, but I think it's going to be tough sledding. In other words, the easy money's been made. If you caught any or all of that 30% gain, why not book it, turn around, deploy those funds into something else? Maybe you want to be a lifer for Amazon, hold it, for the next 20 years. I get it, I understand that, but again, I think it's going to be tough sledding. And if it gets up here, I'm going to give you one more level that's going to come in with that trend line. I'm looking at it here. Yeah, I'd say about 146 roughly. Why? Because look at all these reactions. That was support, 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 support. We broke, kind of flirted through it a little bit, so you did trade through it there quite a bit, but it was support back there. Again, confluence of moving averages, 200-day simple, 200-day exponential. Back test of the trend line. Back test of the trend line could occur later on, but I think the sellers are going to step in here, and I think right now is a great shorting up. I gave you some targets on QQQ near term. So there's Amazon. We'll go over a few of them because again, that's what makes the market, are these leaders. Microsoft, a lot of levels on here, but if the one that I'd highlight right now is the primary downtrend line right there. We're very close to it. We also have a resistance level there about 283, and let's see, Amazon I already covered. I'm just going down the line in market cap. Tesla right here. Let's look at a weekly chart of Tesla, and yep, I got some resistance right there about 880. And so there's another one. And then when you, by the way, I didn't do this on all of them, go down to the 60-minute chart. This is why I threw out some short downside targets for shorting. You've got divergences forming on a lot of these market leaders on the 60-minute chart. Let me go back to Apple. There's Apple, negative divergences. Resistance from about 163.50 up to 166.13. Microsoft, no divergence. It's about a higher high here in the PP or the PPO and the RSI. But as I showed you, some resistance on longer term charts. And there's Amazon. Really kind of carries forward this. We've been making about equal highs here on the PPO, pretty much on the RSI, maybe a hair higher there, and higher highs in price. So Tesla I already covered. Alphabet. Alphabet's kind of slogging around in this range right here. And let me look at the longer term chart. There's the daily chart, ping-ponging again. That's the same trading range we just saw on the 60-minute chart right there. So really not much of opinion. This one's in no man's land. No man's land is what I call stock when it's between support and resistance. Resistance about 119.60, support about 105.70. Weekly chart. PPO looks like it wants to turn up, but in a bear market, a lot of times you get rejected, and you can see that already happened once. Looked like we were going to make a bullish crossover there, got rejected. Could happen again. Who knows? Meta's just kind of sucking wind here lately. It still has that big positive divergence. It's back testing the trend line now, so a case can be made. Breakout back test, you buy it, but it just can't seem to get any traction, and it doesn't have support until about 139.25 on the weekly chart there. So Nvidia also poised to make a bullish PPO crossover. So there's some things certainly I consider any given day just about make a bullish or a bearish case on any security or the indexes. But what I'm telling you right now, and I feel pretty strong on, a lot of these stocks are at resistance. These are resistance levels I've had on the chart. Again, we've had a nice run. Can't say with the highest degree of confidence that run is over for the time being. But 30% in Nvidia, and I've been bullish on the semis off that low on the 16th as well, mentioning the semis and tech were what's likely to go up, and it has. And there may be more upside here, but in the near term, I think we're looking at a pullback. You can see Nvidia, you go down to a 60-minute chart, what I just did. And like so many other things, including QQQ, you have this negative divergence right here that's probably going to lead to a tradable pullback. And let's talk about that, and then we'll wrap up. What does tradable mean? Well, here's QQQ 60-minute chart right here. We had a divergent high right here. We had, well, let's just measure the pullbacks in recent weeks since this uptrend started. That one was good for about 7%. This one was about a 5.5.5% drop. This one was about 5%. So there's a range, 5 to 7%. So we'll say 5-6%. And again, turn on all the lines. There it is. There's your divergence right now. Not confirmed because the PPO has not made a bearish crossover yet, but I suspect it will. And then you'll have confirmed divergence when this blue line here crosses below that white line, effectively putting in a lower, excuse me, a lower or an equal high there. That's it. So there's my thoughts. And remember, I said the other day we had resistance up here at 305.41, the bottom of that trading range, but I said the top of the trading range would be where the next resistance comes in, and that's pretty much what we hit today. We hit it in the pre-market session, and we hit it again now. If you didn't, if you didn't get a shot at it today, or we hit it last night too. Remember, this is just this. This is what you're looking. This is Amazon. If I turn on the pre-market trades or post yesterday, let's say show last two sessions, this is what happened. So this is why you want to take profits. Again, this is a reaction. I define a reaction as when something's going up. A reaction is one of two things or a combination of both. It is either you stop and that's your reaction, just like throwing a beanbag sack into a wall. It's just going to stop when it hits it. Or you can throw a tennis ball into the wall and it's going to bounce or have a reaction in the other direction. I think I think this is just the strong momentum carrying into earnings. And as the day goes on, more and more of the slowies, I'll call them, will recognize, oh, wow, I'm buying the stock. It's at resistance. And those that have been in this, caught any or all that 30% move up the lows are going to say, you know what? Yeah, probably a good time to take profit. What I want to go for 50, 60. Yeah, 30% run in a matter of just, really since the last time it touched that low was only back here, June 29th. So, how much farther is a $1.2 trillion company going to go? Is it going to really build another 30% in the next 6 weeks? No, probably not. Again, profit taking, where to? Back here, back to T2. That was my second target, 126-ish, we'll call it 130 maybe, that reaction high, somewhere in there. There's a gap. You could target a backfill of that gap, whatever you want. And then same thing with QQQ, like I said. There was the after hours last night, top of that trading range. You could have shorted it there. You could have shorted it in the pre-market there. And you can short it right now. Can it break it? Sure, it's possible. Look at the PPO is now crossed over if I put on these after-hour trades. And, it's simple. You can either keep a relatively tight stop right above there or give it a little bit of room. And then I already gave you my targets. Let me turn off these. Turn off the after-hours trades. Here, boom. Right here, minimum target 308.83. That's that reaction high right there. Then the bottom of that range. We traded through it a few times, but with the divergences, I think we can come on back down to here and test these. This was a big level for me. Remember that right there? That was a breakout. That was resistance. We had multiple failures. 1, 2, 3 failures there, and then a breakout, and then a back test. We undercut it ever so slightly, but that's effectively a back test. It was even better than a back test. It was a false breakdown, whipsaw, bear trap, sucked out some of the longs, sucked in some more shorts, and then they got roasted on a gap. That's very bullish. That's what gave us this. There's a lot of short covering and a lot of what I call JCL or Johnny come lately longs that didn't want to buy back here. They didn't want to buy here. They didn't want to buy here, but they want to buy right now after the NASDAQ has rallied 16%, off those lows. And so I think the market needs to punish them. That's just what it does. I'm not trying to sound callous or cocky or anything like that. Maybe I'll be wrong, but it's a nice setup. There it is. So boom, boom, boom. And I think again, oh yeah, I was going to measure it for you. Let me turn off. No, I can't turn off all the lines, and I can't see the trend line. I grabbed at the highs, and I'm coming down here. If we come back and test those highs, that's around 296.35. There's your 5.8% drop right in the middle. I said before, these drops range from 5 to 7%, so that splits the difference there. There's your target. Either pans out or it doesn't. So trade it as you want, but that's what I'm eyeing right now. All right, we'll wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.